This is our Forex blog for August 19th, 2014. Before I showcase our currency indexes and meter, I like to showcase how our signals did today. Here's the euro dollar, and there's just one trade. This is how much you risked, and this is what the return was on the trade that worked. And you can see that the win is about 2.5 times more than what the risk is. And that's really the only secret to trading. Small losses, bigger wins. Here's the pound dollar. You can see the first trade of the day. It broke down underneath yesterday's low, did a retest there, we went short, and had a huge win, about 8 times more than what the risk is. Then we went short again here with a very tiny profit. And speaking about this trade right here, I'm working on a new exit method that I'll showcase it right here. Instead of the original stops, I'm going to uncheck that so it will show the new one I'm working on. And you can see in this case it made a little bit more in that trade. It risked this amount and generated, a little bit more than what the risk was. I probably have another month to work on that, and I'm going to release that. It's very essential when automated trading systems are developed and signals that you catch as big a wins as possible to eat up, the inevitable loss. Here's the euro yen, very small risk. Unfortunately, the return was a little bit less than that. Then we went short, and you can see we, made 2 times more profit than what the risk was. Then we went long right here, and it's still in that trade, but you can see it's already generated, 1.5 to 2 times more profit than what the risk is. And again, that's the key to trading. Trading methods that have smaller losses than wins, and more wins than losses, and of course bigger wins than losses on average. You can see here another huge win in the pound yen. We went short or long right here, and you can see we got stopped out with a very tiny loss. In fact, it was about half of what the initial risk was. So that's something else you should keep in mind. When you have wins bigger than the initial loss, that's great, but when losses occur and they're less than what you originally have the stop as, because the price starts to go your way and then stops you out, that's one of the keys behind successful trading. You can see here it generated about as much profit as what the risk was, and this one had a very tiny profit, and then we gave that profit back on this next trade where we got in right here and lost this amount. So you can see this one pretty much wiped this out. We're left with a nice profit here. This took away some of this profit, and we have a huge win right here. So the net profit for the day is somewhere around probably 65, 70 pips. And I'll just briefly showcase the currency indexes, which is just an easy way of trading. It lets you see visually, just like the S&P measures the top 500 stocks. This lets you see what all the dollar pairs are doing, all the euro pairs, and so forth. You can see the dollar's in an uptrend. It has a nice little multi-hour rectangle pattern right here, and then it breaks out. The daily, weekly, monthly trend are all up. It's very likely to go up. And you can see the euro's got a very weak weekly and monthly trend. It has a nice little double top right here. You have a wedge pattern. You're short right here, and when it breaks that trend line, it's pretty much likely to go down to the previous day's low or lower containment bands. So that being said, sometime around 8:30, very high probability for the euro dollar to go down. And our trade might have already been in this. Yeah, we were already short at the end of this bar, 8:14. But if you watched the chart and you went short at around 8:30, you can see it fell about 20 pips very quickly, and then over the next hour or two, another 5 or 10 pips. So the currency index makes it really easy. You spot the strong dollar. You want to trade it against currencies that are weak. You can see here the pound was going sideways, and it actually broke down. At 8 o'clock, it's down so much, though, it's not likely to go down anymore. So once the currency moves too far, you got to be a little careful. The New Zealand was extremely weak yesterday, and it was rallying up. Went right to the previous day's low and can't really get above it. So the strong dollar, weak New Zealand, you'd want to look for sells in the New Zealand dollar, because the dollar is likely to go up, and the New Zealand is extremely weak on all time frame trends and had a nice little counter trend move up, and that allows you to pretty safely get short. Remember, around 8:30 we're looking for sells. Get short right here, kind of goes down a little bit, you move your stop down, goes down a little bit, move your stop down. You risked this amount and generated 2 times, 3 times more profit. And you might want to bring up a range chart, 5R, because you can have lower risk using range charts. For instance, after 8 we're looking to sell. This is your risk. You can see, kind of came down, small profit on the first trend. You could also get short again here. That's your risk. This is your return, and it comes back up to that swing level. Anytime a swing low goes sideways for multiple, usually 30 minutes to 2 hours, it becomes a resistance area, and the price couldn't get above it. So again, a pretty low risk trade right here that also generated the biggest profit of the day, because there was nobody left to buy the lows, especially once it broke back down underneath yesterday's lows right there. So the currency indexes let you know that the New Zealand's weak and it's at a good spot to sell, and it lets you see a strong currency like the dollar, and you just look for sells in the weak versus the strong. And if the strong's on top, let's say the euro was strong and the dollar was weak, then you look for buys in that. That's it. Then you can use our signals and our very intelligent exits to try to maximize your profits, and also spot trades that you wouldn't normally take, especially our counter trend signals, which are very accurate.